Hey guys, morning. Level 2 here. Let me just make sure that we are up and running this morning. Alright, we're in pre-market. You can see where we are located. In the market, we don't have much news coming out today, which is data news. Data news seems to be opposite. These days, I just got in a trade at 86. Two contracts. Looking for stops at 79. 80 seems to be a sticky number, so we're using 79 to 80 as stop points pre-market. Reason we bought there, 2.5 deviation, we locking up a little bit. We have a little bit of structure to the right, so be very careful if you're taking this trade. I would advise a single contract if you're trading here. Just and will be entering options long spread at 70 today. Options long is for end of week 27.70. Sorry, if we hit that price, that's our one deviation move. You can see we trading way outside of value, hence the reason for the buy. 28.04 was your close yesterday. We broke through the 28.15 very cleanly. A lot of selling pressure on that. Let's check what volume looks like overnight till this morning. 300,000, which is reasonable. Also took a dip on oil. I'm not too interested in oil as yet. More or less as a 3% move. If you're looking for single buy, you could use a single buy right at that point at 57.20. So we'll be running us one single buy right there at 27. So we just now buy the market. We got filled at 30 on the live account. Looking for a 2 to 1 trade, which is more or less a return to the 58s on the open. It's a single contract, so we're looking at financing. We have bulls in the market to repair some of the sells from yesterday. So right now we have limited risk of $900 or $850 on the market, which is 3 contracts running for that risk, which is one on oil, two on the ES. So this is what we're looking at. So if you do see 80s, maybe a good place to buy. Pre-market, we're just looking for the small punch from 86 to 90, and we're looking for extended targets back to the overnight breakout. You could see what happened yesterday. We have a lot of Chinese news, trade wars. Here we go again. But the major buy points for today would be that 70. 70 would be more or less targets for the bears, major bears. So 27.70 is your major buy point. So we would have one contract sitting right, well, two contracts sitting right there. Most likely we would be seeing test to the downside here, which is the 82 to 80 range, and then a punch back to the upside. I took the mid, meaning that we look to get in at the middle point of the entry, which is breakout a deviation, return, hit view up, return on low volume, and then more or less punch to the upside is what we're looking at. We trade with small risks. If you trade in this particular range, trade singles, we may get hit early or stops. Be very careful if you're taking a trade at this time. Look for your 9 o'clock open and then trade the market on the oil. What we looking at here is, look at your day, right? So we more or less think we were looking at here the whole, just a punch and a sweep through for the whole, because we trading outside of value. if we have a lot of bears inside, we will be in a sticky position here. So be very careful of trading and how you're trading the buys today. Um, our position is built on more or less having the market close. We saw the bear flag forming on oil. We knew we would get the dip. The occasion is where we just trying to get edges of the market is buy the low, back the VWAP, and then look for your selling points or for value. So that is more or less the trades we have on right now. Look out for certain numbers on it. This is, you see this little area here is where you'll be look to actually getting the trade. We tried to get in it, took a quick punch on us just before we entered the trade. So we entered the trade live. So yeah, absolute entry will be 85s on the market. Look at 2 points beyond the entry. Most of this is based on trading rules and what I look for. You can see how we had the bar identified right here on the 15-minute chart. So this is the lower end, this is your deviation. We went 2 point, we're looking for 2 points beyond to get the punch to the upside. So the plan is is what we're looking at is was a dip overnight. We got this. This was the initial plan. And then more or less I return back to settlement. Just to retest the 2800 flat, which is 0 number big round target. So this is the move we're actually looking for. This is how we trade proceeding from here. So more or less this is your volatility and you have your trailing stop here. So what we're looking for is the return to 90 based on the volatility would knock off we initial trade risk. So our initial trade risk is 7 points at 7.25 points at 2 contracts. Oh, I need probably I wouldn't be live streaming from 9:15 to 9:30. So more or less this is your trade plan, initial trade plan for the day. I would jump back on after 9:30 because um for some reason OBS not letting me go on YouTube itself to actually view a YouTube channel while I streaming. Guess that is why that happening. So I'll sit around till like about 9:15. I do have YouTube chat on, so you could just message me on the channel after the stream or reach out to me. The rotations have increased in size, so that's why we're looking for more or less very large targets. So we'll be following VWAP, what happens at VWAP after if this trade fills, so we'd have minimum amount of risk. So trade location, trade time is very important. You know, we look at the London Open, which is 4 a.m. Eastern. So you can see we punched down, tested, went up, came back down. If we see tweets, we know we might be in trouble. It might work for us or against us based on what the tweet is or how the market takes it. So I was measuring your risk to reward. Yesterday we took uh, 2 contract on the 15th. I have an initial spread built from 85s to on the option side. 85s to 05, which is yesterday close um, for Friday's expiration running right now in the background. So just make sure and change this back to 5 minutes so we could get trades through. Where are we? So you can see we trading way outside of the structure volume. The structure value. That is why we look to buy there. Timing the trade is very important. If you're in the trade and you're looking to take profits, right? So we entered at 30 and we actual, so we look for 1.5 to 1.6 on our risk to reward. Fair scale entities, we wanted to be beyond the 57 flats, just to make sure our stops are in a valid position. I'm just gonna get my coffee. A bit late this morning, getting up. I was looking at the market and I checked away going through some stuff with the guy. Why certain things happen, so I know how we identify what trade looks good, what trade looks bad. Trading blindly is not a good idea at all. Alright, hold on. Came out break even yesterday on we traded. Made money on oil on the buy, lost money on the ES at the 15th. Yeah, I think we net was 180 or something like that. I placed it exactly where the actual trade was. So you're looking for initially the latest London close for it to actually pop back up there. Put this trade on here, which is a long position, which is so I'll be able to see it. 86 stops 7.25. Take profits at 27.99 on account. So more or less we're looking at 1.8 RR. So we have 15 minutes to oil open. So 57.70 might be a nodal test. So if you're looking at trading, look at 70 as a target, as a base target, but we're looking at higher to the VWAP. See what if we trailing is active. We can see trailing active here. So how you just look for confirmation of short-term trade. You would see initial breakdown last night. You have London open, take the dip, form your candle, support candle here. Right there, there's a 5 minutes hammer. In our area of interest, of course, don't just trade hammers and support levels based on what you're seeing. Look for your location first and then look for your entry point. So this is how we more or less read the market. Not everything works all the time. So that would have been my initial signal. Here we'll wake up, see the chart, see the push to the upside, wait for the reversion back to the downside. Use the initial hammer as support, your first entry here, and buy. So you'll be following VWAP very closely on oil and the ES. So VWAP on the ES is at 90 right now. So you want to see the reaction at 90s. Once we reach the 90, we would be looking at what actually going on in the market, see what the volume is, what delta looks like overnight. So we lost a lot of delta yesterday, as you can see, which is overall bearish signal. And so we look to balance out, look for where we could get entry point on the sell. If we do get order flow to the downside, we know where we second buy is located. Not at 80s, it's at 70. You see we tested back this half number. We want to lean off buys on oil, which is meaning that we trade in one contract on oils on a solid basis. Tomorrow it's a holiday, so um, what I do a trade plan, set up my trades. It's a holiday in my country. What I'll do is set up the trade plan in the morning at around 7:38 a.m. and more or less post it on YouTube so you guys can review the trade plan tomorrow. So if no support found, we'll be holding sitting on our hands more or less till London close. To see if there's an opportunity. If we do get swing out early on the open, we add the second contract based on that. Because you can see London close is a very important time for oil and the ES. So we look at time, location, and for the entries. Oil tends to sweep a lot, so you'll take a lot more risk on oil rather than on the ES. I have to be a lot quicker. Been suffering with a cold for the longest while now. Go to the oil futures chart. Oops, long-term chart. You can see why. What is still doing here? Oh, trade. Why we look to get in at that point. So we see the break. Initial in, out for everybody else, which is long-term traders, got swept. Looking to be a bull for a small pop. Back. Then look for the shorts. So this is why you can see clearly why we entered. Right here, looking for 30 to 35 as a sweep, and you enter trade. So we always look for the sweep previous to what we because I saw the oil tend to react. Look for the small supports and reversions in the market. Don't look for home runs. Looking for home runs are a bad idea. So we plan the trade the plan. So we know once we get sweep out of this area here, we'll be good. We adjust our exits to 71. That will give us 45 points, which is 1.5 to 1. So we trade multiple contracts on live, which is 2 on oil, 4 on ES, based on the account size. Well, for top step requirement is more or less the range of 2 on 1. You don't want to put too much risk on. You have your daily loss limits. The idea to be trading multiple contracts, you enter at 20s or 30s. You're looking at the same strategy we used for the ES, which is lean off and have a trailer. So we actually got out at the 45s on one contract, have the second contract running from the 30s. Once you lean off, you enter your second contract. So we would be entering the second contract based on the initial move, which is one contract here. This is just for sure. One contract at 20. Look, the lean off at 50s. And we second contract because we just bought some gunpowder, as we just say. You can see we got locked in our second contract there. Take profit for that is at 28, 48. You can see what it looks like, the risk to reward looks like. And, 20s, $600 max risk. Be 1 minute away from the open. We're looking for that small spike to the upside, back to test. If it does fail, we have a losing trade. Hold on, guys. Yeah, guys, I'm back. Um, let's see where your initial range is. So your initial range is what we're looking for. We not completed the minutes yet, so let me see if we have bulls or bears in the market. What we're looking for is a lean out of this risk. If you do get caught in a bear trap, we already 3% off, so more or less that is why we look at our 3% as zonal area. So we need to get that breakout from this side on the initial move to look at if the bulls in the market for serious or not serious. So the initial delta looks like open range, lost 10,000 contracts over that period of time. Yeah. Most likely the weaker money go try to look to get out of the market early to reinstate sales. So we risk free on this particular trade right now. Got a quick punch. Secondary reaction is what's important here. So we more or less risk free on this. We took 20 points off the market. Looking for the bigger push. Make sure you monitor your SMTs. Then look for your VWAP. Monitor VWAP, monitor what delta is actually doing. So you can see delta is at nil, which is only 400 contracts. Want to see how much contracts we close at here to see if we have any power, any move. With this test and a rejection. You could only know after. Because once the rejection comes, it comes pretty quickly. The punches are hard and fast on oil. So we just monitoring this price here and look for the monetary extended targets. So what we do is roll to right behind, so we are 20 points at risk. We just made those 20 points up. We let the trade run. See if we can get a delta bill to the upside. Looking for that 1% move. Oil is not really a deviation play, well, not sigma play. Sigma and deviation is the same thing. Right, so now you're in the important zone here. So we broke back up over the recent low, which is go back to oil to show you guys this. Right, so try it in a line. So yeah, just more or less support and resistance we worked off here. So this is price level. This was the price level at one time. So you want to see it just back up to the break point, which is the overnights. And just monitor this 50 to 60. 63 should be on the bottom of your kill zone if you want to be a bear. You don't want to be a bear there. The initial move is hard to the upside. Yes, it's responding in tandem with guys coming into the market. You see how big our delta is. $400. Yes, so most more or less I always said oil money on the ES trade at the 15th late in the day. I'll take it at 70. The instructions just gone out for them to take profits at 70. Looking at what the delta is. Delta he might have some chickens resting right here. Don't want to be caught. Looking to be greedy. And there's your 63. which is an important and very important point in the market. So we took off 20 points. You have 20 points of risk on the single, looking for a 2-1 based on the 20 point entry risk. Look at where you're located on your stops. Make sure you don't get swept. Sweep. I'm from the Caribbean, so we don't speak that proper of English. We want to do is make sure get in and get out of trades as quickly as possible in profitable positions. In the zones of interest. So once we take profits there, I'll shut down the stream. We'll be having, well, I'll go on YouTube and check those guys on thing. Trade looks like it operating in the manner we look for. You will have one contract, this one trailing, so the risk are limited for the open. Most importantly, we want to close off oil on this single contract here. Oh, yes, excuse. Okay, there's our 70 out of the market for the while. Watch your view up. If you get your view up, you should be good. See if the ES clears as yet. Nope. So the ES still running. I want to make sure that it's execution, time in your execution. So more or less we risk off in the market. We more or less guaranteed a little bit of profit. Minimum break even today. Once we could clear this, one more trade. We more or less day trade on. So it is now 12 minutes past, 15 minutes out. Shut down the stream. Be back around 9:35 AM for the US Open. You can see the quick rejection. Poof. You can see we are right on that node now. So your major buys today is 70s, 86. based on how you look, 85, 86, how you looking at the market. If you're looking for sales, yesterday's 2800 20 to 2804 might be good selling points. High point sell is value area low. Which would be one of the initial entries, so you could trade off of the 04, 05s to settlement, and then trade off of it. So I'll see you guys in a bit.